Technical excellence in valuation. Let us see what exactly we are meaning on the technical excellence. A valuer's opinion affects the lending. If it's an undervaluation, gone case. If it's an overvaluation, tomorrow if it become NPA, it will be a problem. Investment, yes. Sometimes many of the people who wanted to buy the property, they will come to you. They will ask you, sir, can you just make a valuation report? We wanted to know that they are planning to sell. Or some people wanted to tell you, sir, can you just assess that property in that area, whether it will be, the investment will be good. Long term, not short term, long term. It depends. And taxation, yes, you are working for capital gain, 11 UA, and merger, acquisition, stamp duty valuation, 119, section 119 in Companies Act. Always it will be more useful. But we need to do a structured manner. We need to follow the procedures. Valuation is not a number. It is not just like that you give a number. It is an procedure which has to be done systematically with all sequences to be addressed. Then dispute resolution, yes, court cases, arbitration matter. There actually it is more, it is like equivalent to other. Your valuation has to be much more important. Evidence is more important. Tomorrow the opponent counsel will question you how you have done the valuation, what are the evidence are there, how to come out with this, how you have arrived at the figure. So what you have to do, these are all the things are very important. These questions will be not only from IBBI, it is from court or any other valuation, whatever you are doing there, it will be, people should definitely question you. Apart from all public confidence, people will say if you are doing the valuation, very good. The people in the public or your client, they will have a more confidence. If Sundar Pandian is doing the work, okay, we have a very good confidence. Let us do that. This is the kind of work which is public confidence. So the valuation is a professional opinion supported by evidence and reasoning and judgment. I remember in one of the case I have been questioned, which rate you have followed in your valuation? Which rate? Because we are doing the work for 2011. How you have taken the 2011 rate? How you have adopted the cost increase, cost index, CPWD index? So we need to justify. We'll have to show in which page we have arrived. And we'll have to show to the opponent counsel or the court. We'll have to prove, yes, we have addressed all these things, whatever required we have given. If you are failed to give the reason, it is very difficult. They cannot able to take a dispute. I mean, resolute. So your side will become a wrong. So you'll have to be more careful. You are not only supporting your client, you are supporting the case. You are supporting for the resolution. Even the arbitrator will have a confidence once they saw the report. Young valuers must learn to convert inspection, observation into defensible conclusion. What is defensible conclusion? Whatever you are doing evaluation, suppose somebody is questioning you, you should answer to the people. That is more important. You should reply technically in a sound manner. Your procedures are right. Your methods are correct. Your inspections are correct. Your data collected is correct. Whatever you have collected data that is correct, you are stand with that. Very confident. Yes, what I have done is correct. A technically excellent report is clear. I told you, you just follow the IBBA, whatever the procedures they given. It'll weigh out. You just start doing it one by one, para by para. Whatever given, you do it. It will come out very wonderfully. Practice. That is what it makes you a perfect valuer. A technically excellent report is a clear, traceable, independent, and fit for purpose. Fit for purpose. There was a valuation required for an insurance company to sort out the claim. The surveyor has given, the company is not happy with that. They wanted an expert opinion. They are asking, okay, are you a registered valuer? Yes, I wanted a valuation from you. This is the property which has affected. We wanted a valuation as on today. What you'll have to do? You'll have to analyze each and everything. And you'll have to do the entire valuation. It should not be overvaluation. It should not be undervaluation. Balanced. Within 5 to 10% is okay, but not more than that. Then this may not be a correct valuation. So the objective is not to find a number. It is not to find a number. It is to explain a value opinion that can withstand for a review. In fact, you all know that every RBO is doing the peer review. I'm happy sometimes actually we have seen that our IOV has given a peer review comments also, how to improve your valuation, what are the gaps which are there actually for the values to come. They never mention who has done the mistake, not required. In the peer review, actually this is required. Not only that, whenever you are doing the, your subordinate is doing the valuation or you are doing the valuation, you can always check with your subordinate. You can let them do the peer review. Let them check what we have done the mistakes. Generally, for a court case studies and all, I always depend on some senior valuer. I always take their opinion. It's always good. Why? Because when it goes to the court, the third person will question you. That means what? You can always depend on some senior valuer. You can request him. Sir, please kindly go through that. Kindly address this. Kindly let me know that wherever that I have given a gap. Many times it has happened to me. I had been to some of our senior valuer who are very kind enough. I really salute to them, whoever they supported me. But you need to learn. You need to learn. I remember once Abdul Kalam sir was mentioning about learning. Learn, unlearn, and relearn. Relearning. As a valuer, the valuer's data bank is very important, not only data bank. You need to understand the updation in the market. How many of you have seen the IBBA circular, the recent circuit? It has been circulated in almost all the groups. One of the wonderful circuit. You believe it or not. It is step by step procedure. They are given very nicely, wonderfully how to do the valuation. What are the things have to be mentioned in the report? So this is what exactly the objective is, not to find a number. Please kindly note down. It is to explain a value, opinion that can withstand for the review. Identity the correct purpose. We need to know the purpose. Whenever we do valuation, the first question we need to ask the client is the purpose. What is my scope? What is your purpose for doing the valuation? You should ask, you should communicate. I have seen many of the valuers will never discuss, never inquire. I'm not telling everyone, very few. We have seen some of the, in peer review, we have seen some of the valuers report also. The communication and collecting data is more important. Sometimes that may be helpful to you. Local inquiry, neighborhood inquiry. If I ask for 3 kilometers and 4 kilometers rate, I'm adapting it into the valuation. Will it be a correct? No. You'll have to adjust. You'll have to discount. Or you'll have to give more value. It depends. Basis of valuation. Yes. Purpose correct. Next is basis. What is the basis? Fair market value, liquidation value, distress value. And anything, whatever you do, the 4 things are very important. 4 dates. Date of appointment, date of inspection, date of valuation. Date of valuation may differ. For capital gain, we do 1/4/2001, the property which has been sold earlier before 2001. And for CARP, admission date we are taking. And for the court cases or land acquisition cases, admission date. So we need to ascertain from the client or whoever is ordering you, the details are required to be taken from the client. What is the purpose? The purpose is such a very important thing. Your approaches may be different. Your valuation methodology may be different. It depends on the property which you are taking for the valuation. Collect and test data rather than accepting every input at face value. You need to do the analysis. You will get all data from market, web search, local market, everything. Many times, actually, we have seen there was a data which has been collected in many of the web search has given 2,500, 3,000 in the same locality. We got some evidence. We got everything. But you will not believe when we have inquired the neighborhood. Next, the flat was not sold for so many years. There is a question, why it is not sold? Then the neighbor told me, sir, there, that plot, oh, there was a murder happened. Somebody was buried inside that plot. That is why nobody is going into the plot. Nobody is buying that plot. The people who know that, who came to know. Anybody who wanted to buy any of the property or anything, what we'll do? We'll ask hundreds of questions. If I'm buying a plot, I will ask hundreds of questions. Whether this is correct or wrong, we'll get a legal opinion. Nowadays, the opportunity, greater opportunity is the people are coming to the values and finding out, sir, what will be the value on that property? Can I buy that property? Is it worth it? It is viable. Is there any risk? Is there? There are so many questions which have been asked to the valuer. Money is not a criteria. They wanted only the result. They wanted only the reply. In that particular land, it is a stigma land. The land is a stigma land. See, if somebody is buried inside that, actually there is a stigma in that particular land. So what has happened? You need to give some discount, but you need to mention all these things. And you'll have to record also that it is not sold for so many years. If the rate is very much less or discounted, people may be interested. Some people are very daring. Yes, we will buy that property. They do conduct some pujas or whatever it may be. They will buy that land. They will convert it into some any other purpose. So the face value, input at face value is more important. It is not that just like that select, okay, that area is 2,500, let us adopt 2,000. That is not correct. We'll have to be more careful. Choose and apply market, cost, and income approaches correctly. Many of the times we have seen actually every valuation assignment is different. Every valuation, you take it granted. We have done different approaches of methods of valuation. Here I thank Riggs. Why? Because it insists for two methods of valuation. It says that before you conclude your valuation, please conduct two methods of valuation. Even IBS actually it is not mentioning that actually, but it is better always actually we can conduct two methods of valuation before we take a decision on the final value. So document 1 minute. Yeah. So the document assumptions, limitations, and caveats and risks in a balanced manner. I have done the report. I'm not in charge. I will not take care of this, all the things. No, you are liable. You are responsible. When a valuation is done, you are a responsible person. You need to do the report in a responsible manner. Prepare bank ready, audit ready, and peer review ready reports. When the report signed and delivered, you are answerable, you are responsible, you are liable if something goes. What we'll have to do? We are ready for reply to audit. We are ready for reply to audit for each and every stage. Very important. In one of the case, actually, we have done one property. The property in third floor. That third floor front portion is approved and the rear side portion is unapproved. But rear side portion has been given for a loan. It has become NPA. Now the question rises that what is the problem? Why this particular thing not seen? I always suggest to my juniors, my learning values, you should measure the plot, FLAT. Carpet area, measure the carpet area, find out the super built up area. Generally, the common area aspects will be vary from 20%, but not 60% and 70%. We have seen some of the property. We have informed the bank. The common percentage has been given so much of percentages. Common percentages given for so much of percentage. We caution. We give the caution. So much of percentages have been given as a common area. The registered document, those days actually it is not transparent. Nowadays, actually, after 2016, after RERA, the carpet area method has come and carpet area they'll have to record very clearly. But even today, there are some places they will mention in a very small area, carpet area, but they'll go for a super built up area. The cost will be super built up area only. But your report should be very clear and it should be audited by somebody and you are responsible for reply or you are ready for any peer review. If suppose somebody is questioning that how you have done the valuation, you are supposed to answer to the people. That is more important. Here actually let us see that the purpose and scope is very important for any of the valuation report and evidence and instructions are very important. We discussed a lot of things and approaches, cost approach, market approach and income approach and what kind of adjustments we need to give. In liquidation valuation, you cannot just like that apply some percentage and adopt. No. What for you are given the adjustment? What for you are given discounted 75%, 25%? This needs to be addressed. This needs to be addressed very clearly. What the percentage has been adopted? What are the different percentages you have considered for giving the liquidation percentage to the 25% discounting? It's very important. Many of the reports, that's why actually many of the reports actually the IBB has questioned the people. How you are given 25% discount? Logically, that is correct. You'll have to give a justification for the discounting percentage of 25%. The ESG impact is there, you'll have to give integrated into valuation. Some entity is required to repair the building and repair and cost, you need to include that repair and cost. And the plant is closed for so many years, you need to consider a lot of discount. Obsolescence. Wear and tear is considered in the depreciation, whereas obsolescence need to be considered. We need to know about the obsolescence. We need to know about the obsolescence in the real estate market. Technical obsolescence, physical obsolescence, functional obsolescence, economic obsolescence. These are all the things need to be understood by the people. Then only you can able to report or report making. What is the future perspective? This is one of the most important things for the perspective. Whenever you do the valuation, you need to be more careful. So let us see one by one the principles or standards, basis, and ethics Whereas practices, inspections, evidence and methods, and casework, bank report discipline, very important. And perspectives, yes, ESG, environmental social governance, and artificial intelligence. Nowadays, actually, it plays a vital role. People are afraid. Oh, some bank will start doing on the AI, they will do everything. No, AI will give you some information, supportive information, but decision making has to be done by any valuer. So if you do that, your work very perfectly, everything will be very good. Let us go into the next topic. The technical excellence is the discipline of making professional judgment visible. So finally, your professional judgment is much more important. Let us start something about the principles, the foundation, the standards, purpose, basis, assumptions. You need to have a data collection. The caveat circular is much more important. It has been prepared earlier in 10th September 2021 was released, and it was prepared by the very senior most values. I salute them. It is because it is very wonderful. I think we are all following from that day onward. That is one of the wonderful circular. It gives how to prepare the report also. It gives how to prepare the reports also in the very detailed manner, paragraph. What are the things that have to be covered in your report? Ethical valuation, you need to be unbiased. You'll have to do on your own. And professional skepticism should not be there. You'll have to do in a very professional way. This is what exactly is required. What are the valuation equations on this? Terms of engagement is very, very, very important. If you are appointed, if you are taking an engagement letter, you need to find out what are the details that have been given, what is the purpose of work, what is the scope of work, what is the fee for that, how the advance will be paid, and what is the final amount will be paid, how many copies of report has to be given original, what is the scan copy to be given or not, how the payment will be released. These are all the things are very good. Terms of engagement. And what are the valuation of properties to be done, and what standards you need to follow. Everything will be there in the terms of engagement. That is one way it is good. And asset fact, many of the times in many of the cases, about the asset, you may not get very good information, but you need to do the all groundwork we need to do. Sir, they are not given anything. What will I to do? Shall I do it or not? Select whatever the basic informations are obtained from the client. You need to take. Other things, definitely you are inspecting the site. We need to take select information from the site. And many of the things are available in the government website like EC, guideline rate. We can take all those things actually from there. Market evidence. It is not so easy to do the market evidence. The market evidence is one of the wonderful, wonderful part in our valuation. We need to do local inquiry. We need to do market inquiry. We need to collect all the information from the site, and we need to work with a web search or any other bank action property. Sometimes actually it will be good to see that actually you will get a action property for evidence you will get. But action property, that will be only the distress value. But you need to give the adjustments. You'll have to give at least 1.2 times or 1.15 times of the property. You'll have to calculate, and you'll have to give the detailing for that particular working on the bank action property. Because you don't get any of the properties in that area, you are not getting any web search also, and neighborhood also, they are not giving you any value. And some people are giving orally, but you need to confirm through some evidence. So market evidence is very, very, very important. Then approach and model. Selection of approaches are very important. Selection of approaches are very important. And you'll have to do whatever the required for the approach, whether it is income approach, market approach, or cost approach. You'll have to collect all the details. Cost approach, if you are working, you need to justify. In all the reports, we'll have to mention this. Cost approach, market approach, income approach, why the approach is selected, what is the reason for selection of approach. You need to mention in your report. That will be good. Or you'll have to mention that I have adopted market approach method of valuation for this property using a composite rate for the flat, supported by income approach, rental capitalization method, because the property, the flat was rented out. So we need to compare both the things, how much it comes. It is not so easy to adapt this approach. We need to select the approach. For this property, which method is suitable, how to select this approach, that is very important. You have done all this approach, calculations, model, everything. Finally, coming to the professional judgment. Yes. Now you have done on analysis, you have come to the end, you need to disclose very clearly that what is the value you are going to adopt. When you are giving the value, you should write very clearly that reasoned value opinion. Why you are giving the value, what is the reason for this, what is the opinion, final opinion for this particular property. This is what exactly is more important for doing the valuation. Purpose derive everything. Yes, we have seen. But let's see here. A valuation for banking, lending, or taxation, or insurance, or internal reporting, accounting firm may require a different basis. Yes, I told you, every assignment is different. Assumptions and report emphasizes. Report emphasis. There are purpose and common focus. Let's see here, very interestingly. Bank lending, what is the common focus? Fair market value, realizable value, distress value. Realizable value, straight away we adopt 90%, and distress value we will adopt 85%. We need to give the reason. What for you are giving a reason, a realizable value 90%? Why you are discounting for 10%? Why we have given distress risk? And one more thing I just wanted to mention, whenever we take this, whenever we are justifying for this percentage, we need to find out the negative impact and positive impact. Positive factor and negative factor is very important to find out. We always do that. What is the advantages and what is the disadvantages? We will try to find out what will be the property negative impact in that particular area. If you are inspecting a property which is a vacant land, it's very difficult. It's very difficult in the sense, actually, you need to be more cautious and you need to be more due diligence to be done. There should not be any zoning to be checked, and what is the any HT line is going, or any Nalla is going, or any nearby airport is there, or any other catchment area is there, and any burial ground is there, cremation ground is there. It will have an impact. It will have an impact. Because in the zoning, in the DCR, everything has been given, which within the distance, this has to be there. IBC, there are three values: fair value, liquidation value. Fair value and liquidation, only two values. I told you, the liquidation value, when we give it, whenever we are giving the discount, we need to justify that discounting percentage. Then comes to the insurance. There are two values: reinstatement value and insurable value. Coming to the taxation, specific statutory basis. Income tax different, and the capital gain is different, and 11 UA is different. There are so many. Then internal reporting, it should be in a financial reporting basis. So what we'll have to do, the purpose derives everything. True. Always confirm with the client and intended use and intended uses before inspection. See, you'll have to do, not only we'll have to take an order, not that. We'll have to collect the data, inputs, whatever related to the property, we'll have to go through that. And for that particular property, you can make the inspection checklist. It may different. For bank, it is a common thing, common checklist you can have. But whereas for a different purpose of property, it is always better, actually, you'll have to prepare your own checklist. What is required, what is not required, what are the things has to be checked, what are the things has to be, we'll have to verify that at site. So we need to check the entire thing with the inspection checklist. That will be better. I have seen many of the senior valuers, their stops is used to go with the inspection checklist. Even if they are not carrying, they will come back and they will fill up the entire checklist. Should form part of a record for the internal use, not for when submitting the report. At least they know that actually what exactly the value has been given, what is the impact is there, whether any negative impact is there, how it has been seen, what are the things is there, what is the data is collected, what is the local inquiry says. All the things will be more input from the checklist during the inspection. Then define the asset, property interest, land extent, building area, plant and services. Sometimes the drawing was given for a higher area, whenever you measure that, actually it will get a less area. You have to be more careful. Many of the clients will come and give you, sir, you take this drawing, everything as per the drawing. Don't worry, sir. One side you measure. They will show where the measurement is correct. That's all. They'll think that, oh, we have done everything, the drawing is there, let us go with that. No. You need to measure independently. You need to measure independently, which is very important. Lease interest, yes, this is much more careful to be done. What are the conditions has been given in the lease agreement? Whether it is for 30 years, whether it is for 99 years, perpetual lease, 99 years. And encumbrances. These are all the things need to be gone through the entire thing that drives the purpose of valuation. The 4 dates are very important. I told you it should be mentioned separately, which is very required as per the IVS. How many of you is mentioning? I don't know, but please start mentioning it. Date of appointment order, date of valuation, date of inspection, date of report. All 4 are very important. Avoid using one report for another purpose without fresh review. I told you it will differ. What we are doing now, Form 170 is there in income tax capital gain valuation. You need to write everything in the capital gain in the Form 170, not Form OFN. Now it is revised. Form 170. You start practicing that using the format whenever you are doing IT work. And for bank, it will be totally a different valuation report. And CARP or IBC or any Companies Act valuation, it will be totally different. We need to do some procedural work for each and everything. Basis of value is not optional. Basis of value, market value, fair market value, liquidation value, and investment value are not interchangeable. Is it possible? No, it's not possible. Take the basis of value clearly and consistently throughout the report. You are doing IBC work, CAAP work, you have to mention very clearly and thoroughly fair market value and liquidation value in CARP or liquidation. Do not mix market evidence with the for sale assumptions unless basis require it. You need to give adjustment. You need to do analysis. You need to work out. Explain realizable and distressed value as bank risk opinions were required by format. People may think, sir, we are adopting for so many years. You are telling something new, but you have to be more careful. How you have adopted 90%, how you have adopted 85%. You need to have the positive, negative impact. Positive factor, negative factor for that particular property. In any of the property, there will be an advantage, disadvantage, or positive or negative factor will be there. What we'll have to do? We'll have to be carefully analyze that. We need to take the inputs. Whenever we do the collection of data, we need to take. In an open property, there is one HT line is going. Is it possible for development below the HT line? No. Central Electricity Board, what the guidelines are saying. There should not be any development from the HT line on either side. 9 meters or 18 meters, whatever it may be, but we need to check. We need to carefully address. What will happen? That throughout area will go for the development. You can lay road. In many of the properties, many of the area, we have seen only the roads has been laid with the park, beautifully maintaining the park. But this entire area, this particular road occupies the place. So what happened? That the effective area will come down. The effective area will come down. So always do a risk opinions where required by format. You need to make ready yourself. Always connect basis of value to purpose. What is the purpose you are doing? Your purpose is for income tax. You are doing a valuation for income tax. So what happened? Capital gain. You are doing a work for CIRP. It's a fair market value and liquidation value. If you are doing for a liquidation value. You need to find out what are the different things are there and how to connect that. For the liquidation percentage, wherever you are discounted, carefully you have to give. Always connect basis. You should connect basis of value with a purpose for the valuation. All these things to be connected with the standard. I am working for this particular purpose. For accounting purpose, we need to do the valuation for fair market value or fair value for the requirement as per the standard. This is what exactly required.